Hi everyone, let's look at my low time frame and micro counts, including potential trading setup, starting with my low time frame bearish scenario where we're looking for a 1-2-1-2, then a 3-4-5 in yellow to eventually finish that blue 3. If we then look at this wave 4 over here, what you expect usually is if wave 2 is deep and short in time, as this one is, you expect a wave 4 that is a bit of a longer range and is shallow. Now the 0.236 for a wave 4 is a shallow target because you also have the 382 and the 0.5 that are higher up there, but the 0.236 is a nice shallow target for a wave 4. And also what I like about this wave 4 being put over here is that it basically wicked above the highs that we made earlier on the 1 hour, took the liquidity and then started to move to the downside. Now looking at this structure over here, I do have a scenario where we go up once more and then the wave 4 will move to the right side. But as it stands now, I would prefer price going to the downside. But of course we go into the micro time frames and I'll show you what's up, including also with the CVD. So in this particular scenario, if this is then the high of wave 4, we're looking for a wave 5 to the downside, where the most common target for a wave 5 is the white box that you see over here, basically between 27k and 25.9k, where the daily naked point of control is actually just above this target area, which you can see has been hit yesterday. Very, very nice indeed, but it actually missed out on the white target box, unfortunately. And also if we look at the price action that we got over here, you do want to see 5 waves in a wave 5, right? Like wave 1, wave 3 and wave 5, they also need to have 5 internal waves. And as it stands now, I cannot count a clear 5-wave structure. So you can count 5 waves over here. So could that then be the low of this wave 5? Well, you would call that a truncated 5. That is possible if wave 3 is very, very extended, but it's also very rare. So it is not something I'm looking at the moment. Only if we get some sort of a corrective, like big structure coming for potentially this blue wave 4. That is the moment where I might be like, okay, wave 5 might be truncated, but because it is so rare, it's definitely something I like to do immediately right now. Then another level over here is the key level, which is the lows over here. And that is important because the only potential setup that one can have with this key level is a swing failure pattern setup. So wicking below, closing above, and that could be an entry to move to the upside. However, if price is going to continue to the downside and close candles below this level, below these lows, I think we might be in for a little bit of a drop because my next target box is all the way down here between 24,850 and 24.3k. So that is my next big support area, and I do think that is a very attractive support area in general, and I would really enjoy this area actually to be hit. Of course, I do not control price and we have to wait and see. But also on the higher time frame counts, which the video will be linked at the end of this video. This area is actually quite an important area with lots of support. So this is a very interesting area indeed. Now, if you then go to the micro scenario and first go to the bearish one, we are looking at this as a 1-2-1-2. So over here we then have a WXY, which is a nice corrective structure to finish that wave 4 over here. Y ending in the most common target for a wave Y between the 1 and the 1.236 trend-based fib extension, taken from the low of W to the high of W to the low of X. So that's very nice. I didn't really like the fact we didn't hit the daily naked point of control as an important resistance. We just missed out on that. So that is something to keep into account, that if price moves up, the daily naked point of control is definitely an interesting area. So in this particular scenario, we're looking at this to be then a 5-wave structure to the downside in a wave 1, a corrective 3-wave in 2, another 5 waves in 1, and then this is another corrective wave 2. The invalidation is if price is going to go above this wave 2 over here at 27.7k. That's something you don't want to see in a 1-2-1-2. Also, if this is part of a wave 5 in either then yellow or blue, whatever it is, we should expect a bigger impulsive move to the downside. Usually a 1-2-1-2 is a wave 3 type of move where wave 3 is very, very impulsive and you can get a 1-2-1-2. In a wave 5, I suppose you can also get them, of course. I mean, in the end, every wave has 5 internal waves. But seeing this in a wave 5, where the targets for a wave 5 are over here, if we open the low time frame box over here, if the target for a wave 5 is over here and this is a 1-2-1-2, you expect price to just push straight through this target area to probably the box below. So that is something to keep in mind as well with any potential setups here, that if price is going to come to the downside and it's just going to tank on high volume, like increasing volume to the downside, there's no whatever trading setup to the long side over here, of course, depending on what you see, because again, if we wick below the low, close above, might be interesting, but at least the invalidation over here is up there. And then the scenario that I've explained yesterday as well, where we have this expanding flat. So we have an A or W. I changed it to W as well now because of the structure that we have over here, and I'll tell you why. Let's stick with the ABC first. So we have 3 waves in A, 3 waves in B, and then you're looking for 5 waves in wave C to the upside, where again the daily naked point of control is an interesting target, as the target area for an expanding flat is between the 1.618s over here. So the daily naked point of control is part of that. Now, if this is a wave C, I quite often like to see a very fast and swift wave C, right? So a relatively quick move to the upside. However, we got a good start and then we started to range like Bitcoin likes to do. So that is the reason why I also now included a WXY. So an ABC is a 335 wave move, while a WXY is a 333 wave move. Also a little bit of a range, where we then have again a 3 wave, that's the fine, but this final leg is not an impulse but another 3 waves to the upside, where this is then only the first structure. Then we have a corrective structure, so this is like an A, B, C, then you get a correction again, and then you get another 3 wave move to the upside. This can still be part of a wave C, honestly, like still an impulse, where this is simply wave 1, corrective wave 2, 3, correction wave 4, 5, right? That is absolutely possible. I just want to keep the option open in case this is going to be some sort of a 3 wave. But I think if we are going to move above the invalidation of the other scenario, it is very likely we're going to hit that daily naked point of control at the high. And if we do look at the CVD as well, which I always like to keep my eye on, we do start to, well, it's not yet confirmed bullish divergences, but they are definitely starting to be there. Actually, we do have on the 5 minute. Now we have a look at it. So over here, you can see price made a higher high on price over here, and we made a, by far, you can see the yellow line, lower lows on CVD. So higher low on price, lower lows on CVD, bullish divergences, where the main first target is going to be the highs over there. So if we go to the chart, then and to the 5 minute, then actually on the chart it's invalidated. Now that is interesting, that on the CVD you can see there's clearly a higher low, but on the chart there is not a higher low because it is invalidated. And for me, that's actually, I've never spoken about this yet, but the chart is leading, not the CVD chart. This chart I have is leading. And if I quickly go to another chart, let's have a look. So on the Bybit chart over here, we did not take the low. So that is interesting. So on Bybit, you do have a bullish divergence with then the target over here. But on the Coinbase chart, which I use, we actually took the low. So that is a little bit of discrepancy between the charts. That's very, very interesting. That doesn't happen too often. But yeah, on the Bybit chart, we do have some bullish divergences. So yeah, you can see price push up, take this high, and that might also be the beginning of a continuation to the upside. If price is going to continue moving to the downside eventually a little bit, then what happens with the CVD as well is if we go to the 15, you can see then that if price is going to move to the downside a little bit, the CVD could move to the downside as well, where eventually you get a bullish divergence with the low that we made over here. So then you can create a higher low that is yet to be made, but then you can create a lower low on the yellow line, because as it stands now, there's no bullish divergence with this low over here. You can see if I put my cursor on the CVD low in yellow of this low that is made on price, the yellow line as it stands now is above my horizontal cursor line. So there's no bullish divergence going on there. So yeah, this is quite interesting actually. It doesn't happen too often that I spot discrepancy between different charts. So in this particular scenario, we're expecting a move to the upside, and we do not see any bearish divergences on this time frame. And that is something to keep into account with the bearish scenario, because if this is really a bearish scenario in a 1-2-1-2, it would be nice that eventually you are going to see some bearish divergences, because here what you want to see is absorption to then push price to the downside, and we're not seeing bearish divergences. Instead, we are seeing some more likely small little bullish divergences, or potentially, if price drops, some bigger bullish divergences. So that is something to keep in mind, where I think at the moment more upside can be expected, where also, by the way, to finish things off, we had the trading setup over here. So yesterday I explained the potential trading setup is if price goes to the downside for this wave B, most common target area between the 1.38 and the 1.236, where the daily naked point of control is just above, where I explained like, hey, it would be nice to wick in this area and then move to the upside. And that is what happened. And I also explained this is a reactive setup. You don't just want to, you know, from an Elliott Wave point of view at least, and of course you do you, your strategy, your plan, no financial advice in this video, but from an Elliott Wave point of view, you don't just want to ladder longs in this area with a stop loss below, because price could as well have just tanked to the downside in a wave 5 and continue. However, because we saw this 5-minute candle over here after hitting the daily naked point of control, closing above the 105 over here, hitting the most common target area for a wave B, that is basically the moment where you're like, yeah, okay, the probabilities might change for potentially a move to the upside. So that would be the potential entry over here, where the stop loss initially goes below the low, but once you move to the upside, this is a good entry as well. That's when entry break even, and yeah, you just wait and see if it's going to reach the target area. At least probably the main target area is going to be around this wave C as well, so the daily naked point of control, and then wait and see what price is going to do over here. But this 5-minute candle was an important sign basically for potentially a switch to the upside, because of course if we look at the volume was increasing to the downside, as I explained yesterday as well. So you don't just want to catch knives, but you want to see some signs that a reversal might happen for this A, B, and then a move to the upside in a wave C. And that is what we got on the 5-minute for then a potential entry and then a long scenario to the upside, where it seems price is pushing at the moment for a little bit. So yeah, this scenario with another push to the upside might be the most likely one on the micro. But of course, I'll provide you with another update at 1 p.m. Central East European time. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.